The much awaited earnings season will kickstart today with TCS starting its quarter 4 earnings today, and the expectations are running quite high, not only from the IT major but overall from the market as well. Let's have a look at how the Nifty's EPS is expected for the fourth quarter of FY21, which comes on the back of the highest quarterly profit and EPS that was reported during the previous quarter by the Nifty. So the EPS estimate at the start of Q4 FY21 stood at 160.1 rupees, which was revised slightly down towards the end of the quarter of Q4 FY21 to about 159.5 rupees, and that has seen a further downward revision to about 158.6 rupees as of the current date. So with that, let's have a look at how the forward valuation picture for the Nifty looks like. For FY21, it is expected that Nifty could end the EPS year with about 526 rupees. That implies a price to earnings multiple of 28 times. For FY22, it is expected to be 695 on the earnings front and 21 times on the price to earnings multiple. For FY23, analysts are expecting EPS of nearly 825 rupees, which imputes a value of about 18 times as far as price to earnings multiple is concerned. Now, like I was telling you, this particular quarter, the expectations are riding too high. So, in case of any disappointment, there could be a trigger of for a sell-off in the individual stock or the company that reports earnings that are below the analyst expectations. But which are the key sectors that you should watch out for? First up is the metals sector, which is on the back of a strong pricing environment as well as higher volumes. It is expected to do well. Secondly, watch out for the private banks along with the NBFCs. That's because there could be a moderation in the slippages, and there has been an improved disbursement that we've had along with the improved collection efficiency as well during this quarter. It is expected that IT will continue its strong performance from the previous couple of quarters as well. Moving on, the auto space, that is likely to do well as the operating leverage, the benefits that have been provided by that would be offset by the commodity cost pressure. So that could also be at the forefront. Lastly, watch out for the consumer staples as well as durable sector. That is on the back of a strong demand recovery that we have seen despite the commodity price inflation that has kicked in the recent past. So that's the overall summary that you should be watching out for. As far as the Nifty's EPS for Q4 FY21, you could expect anywhere between 155 to 160 rupees for the last quarter.